All right, joining me is Jay Jacobs, U.S. head of Thematic and Active ETFs at BlackRock, who, of course, is the world's largest ETF issuer. And here in the U.S., they're now at nearly 450 ETFs, about $3.2 trillion in assets. That includes what I'm calling the single greatest launch in ETF history, the iShares Bitcoin Trust, ticker IBIT, which, by the way, that's also celebrating its 1 year anniversary this week. But it's been a remarkable past year for IBIT, along with the iShares Ethereum Trust, ticker ETHA. That launched in July and actually finished in the top three ETF launches for the entire year. Top three. But Jay, it is always a pleasure to connect. Thank you for joining me.
It's a pleasure to be here, Nate.
Okay, so whether or not everyone agrees with my labeling of IBIT as the greatest ETF launch ever, there's no question it is one of the most successful launches in industry history. I mean, you look at all the numbers here, it's amassed over $50 billion in assets in just under a year. I show nearly $38 billion in net inflows. I think, however you want to slice this was an historic launch. And so I'd love to start just by hearing sort of how and why this happened. Why do you think IBIT was able to achieve these milestones?
Well, as you said, it is certainly a remarkable launch. We had very lofty expectations, and they were, frankly, very justified because we've been hearing for years that there was so much client demand for bringing Bitcoin exposure into the convenience and accessibility and quality of a BlackRock ETF. But still, 50 billion is a tremendous number. I think what it really represented was how much of a bridge this product IBIT really represented between both decentralized finance and traditional finance. That people who previously had been trying to access decentralized finance but maybe couldn't, maybe they had restrictions on the ability to buy crypto directly through digital exchanges, or maybe they just didn't really like the existing structures that were already out there, like futures or kind of Bitcoin tracking stocks. In a way, the exchange traded products that came out in January really represented kind of the ideal solution for them. That you could get very, very close tracking to the price changes of Bitcoin by virtue of these exchange traded products like IBIT, just buying Bitcoin and holding it in a grantor trust. But being able to get that exposure through a traditional brokerage account, being able to buy it through, kind of traditional financial rails, holding it alongside the stocks and bonds that you might hold in a traditional account as well, and really being able to see it through a whole portfolio lens. So, again, I think it's really the story of building a bridge between decentralized finance and traditional finance.
Yeah, and to your point there, you look at the launch of spot Bitcoin ETFs last January. That really was the first time a lot of retail investors were able to easily access Bitcoin. And I know there's been a huge effort by iShares to help educate investors both around IBIT and Bitcoin itself, which, by the way, I love the videos that you star in. I see these all over crypto Twitter. But can you talk more about BlackRock's initiatives around crypto education?
Absolutely. So, if you look at some of the early days of IBIT and the other, Bitcoin ETPs, some of the earliest buyers, I would say, were people that already kind of bought into the Bitcoin story. These are people that maybe already had exposure through, again, they could have bought it through futures, they could have bought it through Bitcoin tracking stocks, maybe they owned it directly through digital asset exchanges, but the exchange traded product represented just a better vehicle for them to get that very close tracking to spot Bitcoin price. But as we saw these products really mature and start to get more adoption and more inflows, what we realized was it wasn't so much about people that already kind of bought into the Bitcoin story. It was increasingly reaching new people who were starting their educational journey around digital assets, thinking about what is this asset? How does it compare to other more traditional assets? How does it fit in a portfolio? How much might I want to allocate to that? And we felt, it was really our responsibility, given the success of the product and, our, general approach to exchange traded products has been around education. How do we help people understand what are they getting when they buy IBIT? How to think about it in the context of a portfolio, how to think about sizing a position, how to think about the diversification benefits, and really kind of providing that holistic education approach. I think this is what gets us really excited about the future growth of IBIT. Again, I know 50 billion is a tremendous historic launch for an exchange traded product, but we think there's so much more potential beyond that as you see whether it's end investors, financial advisors, institutions, all of them are really kind of starting this journey at different stages. We expect there to be more adoption going forward of Bitcoin, Ethereum, and potentially beyond.
Yeah, and you're alluding to it there a little bit, but I'd love to have you talk more about who is actually buying IBIT. What does that look like from a retail investor perspective? And then what does that look like in terms of adoption from wealth advisors and institutional investors? We now have 12 months of data. What does that look like?
So roughly half of the inflows that we saw last year from US-based investors were direct. These are end investors logging into an account and buying IBIT directly. The remainder, that other 50%, was roughly split between financial advisors and institutions. Now, in a lot of cases, for any new ETF, it can be pretty common to see end investors be some of the first buyers. They have, among the least restrictions for buying a new ETF. They can be kind of early movers, early adopters. But what I found so fascinating was this, really represented billions of dollars coming into the fund. And going back to that kind of bridge analogy, it really, in many cases, kind of solved issues that end investors were facing. Maybe they had already had an account on a digital asset exchange and were buying Bitcoin directly, but they didn't want to deal with custodying the asset themselves. They didn't, they wanted to be able to trade it with tighter bid-ask spreads. Maybe they wanted to be able to hold it alongside their stocks and bonds and really see their full portfolio together. And by buying IBIT instead of Bitcoin directly, it really kind of solved a lot of those challenges for them. But then also what you saw is that there's probably a lot of people out there that were kind of, we'd call them crypto curious. They were interested in Bitcoin, but they hadn't really made that leap to opening an account on a digital asset exchange to get that exposure. But maybe they already had a traditional financial account. And so the ability to buy it in that traditional account and alongside their stocks and bonds, but just kind of a less frictionless environment to be able to buy Bitcoin really made it kind of easier for investors to be able to get that exposure.
Going back to crypto education, and when I think about some of the new investors coming into the crypto sphere, I know BlackRock has published several research papers on Bitcoin. I've read them all. And one of the recent papers covered allocating to Bitcoin. And it was funny, Jay, because the media really ran with this. I don't think they read the paper closely enough, but the way that I read it was that for investors who wish to allocate to Bitcoin, BlackRock was suggesting up to a 2% portfolio allocation. Can you talk more about that? Because again, this really did get a lot of run out there.
Absolutely. So, BlackRock Investment Institute put out two papers in the last few months around Bitcoin, really from a portfolio lens. And the first paper was about Bitcoin being a unique diversifier. That, frankly, a lot of people in the media try to frame Bitcoin as kind of a risk-on investment. That when everything is up in the markets, Bitcoin is up too, and when everything's down in the markets, Bitcoin is down too. And in reality, it actually loses a lot of the nuance around what is Bitcoin and what are some of the long-term drivers of Bitcoin's value. As a matter of fact, really what benefits Bitcoin is the idea that there's more inflation and more debasement of fiat currencies, that there's more political instability, that there might be more geopolitical risk. All of those things tend to be quite negative for risk-on assets like stocks, but over the long term should benefit Bitcoin. So we think the way that many people in the media are kind of thinking about Bitcoin through this traditional risk-on, risk-off lens actually completely misses the long-term structural drivers of Bitcoin's value. So that's what that first piece was about, really kind of making the case for why Bitcoin is unique and can be a diversifier in a portfolio. The second piece that came out was really around kind of portfolio allocation, how to think about sizing Bitcoin. And Nate, you're exactly right. It starts with the premise of if you are an investor who has made the decision to allocate to Bitcoin, you've already done your research, you've done the education, you've understood that this asset could really have long-term tailwinds behind it for those structural reasons I mentioned. How should you think about sizing it? And that 1 to 2% range is really coming from thinking about a risk contribution perspective to a portfolio. So if you take a step back, what we mean by that is take a step back. If you look at a 60-40 portfolio and you look at those Mag 7 stocks that make up such a high percentage of the S&P 500 these days, roughly those stocks are contributing about 1 to 2% of total portfolio risk. You could think about, if you added Bitcoin to a portfolio, you've already kind of made the decision that you can have some assets in your portfolio contributing 1 to 2% of total portfolio risk. So it's not so much of a leap to say, why don't you size Bitcoin to contribute a similar amount of risk in your portfolio? Sorry, actually, just to correct myself, the amount of risk that those stocks are contributing is about 4% of the total portfolio risk in a 1 to 2% size. So if you add 1 to 2% to Bitcoin, you're contributing about 4% to the total portfolio's risk. And so really you're kind of thinking about it in the same context of a Mag 7 stock. Now the benefit you're getting.
Yeah, go ahead.
No, I'm sorry. And then the benefit you're getting though is that unlike another Mag 7 stock, which is a US tech-based company that's going to have some kind of correlation to the other Mag 7, Bitcoin is a very different type of asset. So it's not just like the Mag 8. You're not just adding another US tech company, you're actually adding something that's very different to the portfolio. Now, what happens is if you go over that 2% level, that you start to see the amount of risk that Bitcoin is contributing to the portfolio starts to really increase in risk. And part of that is because, well, it's a diversifying asset. If you add more of that asset to your portfolio, you start to see kind of a diminishing benefit to that diversification. So that's really the basis for that research around when you think about, if you've already made the decision of adding Bitcoin to your portfolio, how should you think about sizing it and using the Mag 7 as kind of a starting point?
Yeah, and I was just going to say, I mean, when you think about how long Bitcoin has actually existed, and then now we fast forward to today where everybody can access it, Bitcoin itself, its characteristics may change moving forward, and that would obviously impact how you allocate within a portfolio. So I would expect this sort of research and the discussion around allocations to evolve as Bitcoin evolves. But I think that was a good starting point, and intuitively it makes sense to me. Moving forward, I'm curious what's next for IBIT and BlackRock when it comes to Bitcoin and crypto. I think obviously a lot has changed, at least from my perspective, since IBIT launched a year ago. So we're definitely in a different spot today than we were last January. But what does the next chapter look like?
We certainly are. I mean, I think, in a lot of ways, it's really building off of some of the tremendous momentum and themes that we saw in 2024 going forward. One thing that happened really towards the end of 2024 was the approval of options trading on IBIT. And I think this is a really important development for Bitcoin because you can really use options to manage the types of risk or yield or upside that you have in a particular asset. And just like people have been doing that for decades on US stocks, now you can apply that to Bitcoin. So you can think about different use cases for this. There's some people who maybe have owned Bitcoin for quite a long time, and they just want to kind of protect some of that wealth. That if Bitcoin were to go down, they don't want to deal with the volatility. Could you create a collar strategy using options to protect some of that wealth? Secondly, there's people who maybe have owned some IBIT for a little bit. Bitcoin does not generate any income. So they want to generate some yield from that. And that's very easy to, kind of sell a covered call on IBIT and generate some yield. Or maybe they just want to really kind of tailor the different risks and payoffs based off of, what their anticipation of, the near-term market could look like for Bitcoin. So the introduction of options and the growing adoption of those options, I think really makes for a more dynamic environment around Bitcoin and allows people to really kind of tailor their risk and yield to this asset.
Yeah. And, I was just going to say, I would expect, and you don't have to comment on this, there's going to be a tremendous amount of product proliferation around some of the strategies you just mentioned within the ETF space. I'm expecting all flavors of options-based strategies, from defined outcome ETFs to covered called ETFs, you name it. So I think, to your point, having the ability to own Bitcoin in a risk-managed fashion or implement different strategies, clearly that's going to be something we're going to see in the ETF space.
So certainly options were a major development at the end of the year. Secondly, something that we're anticipating is just continued access by advisors. Now, as I mentioned in the end investor world, one of the reasons why end investors can be early adopters is, as long as they can buy it on their, brokerage platform, there shouldn't be too many restrictions to buying it. Advisors on different platforms are restricted in terms of what types of exchange traded products they can buy. And on some platforms, they're not able to buy IBIT today. But what we're seeing is as there's more adoption, there's more education, more understanding, and maybe most importantly, there's demand from the millennial generation, which is accumulating more wealth through entering their peak earnings years, through perhaps inheritance from the baby boomer generation, that this millennial generation really wants their advisors to be able to get exposure to Bitcoin and manage it holistically in the context of all of their financial assets. And so we expect that in the advisor space, there will be more adoption. There should be more ability for advisors to buy Bitcoin and kind of through that expanded access and education, that could be a major driver of IBIT assets going forward.
What about Ethereum? We've spent a lot of time here on IBIT and Bitcoin, I think deservedly so. But as I noted at the top, the iShares Ethereum Trust was a top 3 ETF launch last year, and that didn't debut until July. It's pretty amazing. But any thoughts you would offer on how everything is going with ETHA, and perhaps how you think investors should think about both Bitcoin and Ethereum?
Well, ETHA is a little bit of just struggling because of the older sibling syndrome, right? IBIT was such a tremendous launch, and broke so many records. ETHA, as you said, would have been, is the third fastest growing ETF last year of new ETFs. The 1 and 2 above that were Bitcoin ETFs. And by its own right would be a historic ETP launch. But unfortunately, just with so much attention and assets into IBIT, it hasn't gotten as much attention. Look, I think it's important for investors to understand that while Bitcoin and Ethereum are both digital assets in this crypto world, they're very different from each other. Bitcoin, we really look at through this global monetary alternative lens, that if you see more geopolitical risk, you see more debasement of currencies and inflation, that could really be a driver of Bitcoin prices and adoption going forward. Ethereum is much more technology driven. It is, really one of the biggest platforms for blockchain technology. We would expect that if we saw more tokenization, more stable coins, more kind of unique types of digital assets coming out, a lot of that would leverage Ethereum's blockchain and ultimately create more demand for Ether and support prices going forward. So 2 very different types of stories: the global monetary alternative versus the kind of blockchain bet on blockchain technology. So, I think a lot of people like to compare these 2 assets to each other and say, well, it should be one or the other. We really see them as, how do you look at a gold mining company versus a technology company? Super different types of companies with very different types of characteristics, very different macro drivers of what's going to benefit them. Very rarely would you say it's either or. It's just, what am I trying to do in my portfolio? What are my objectives? And how am I thinking about diversification? That's how I would think about Bitcoin and Ethereum too. And if we see more advancements in blockchain technology, if we see more adoption, if we see more things like tokenization picking up steam, I think Ethereum will continue to grow, and we'll continue to see ETHA continue to be a really successful product launch.
Yeah, I agree. I think in a nutshell, and we can debate the semantics, but I think viewing Bitcoin as digital gold and Ethereum is much more of a technology play. I think if you just want to put a headline on each of those, that's what makes sense to me. And I think that's essentially what you said there. Just a few minutes left here before I let you go. Obviously, crypto will now be under a new regime here in the US. I'm just curious if that changes anything, in your opinion, whether we're talking about IBIT or ETHA, investor demand, anything else on the ETF front. How does a new regime impact crypto?
Well, I think, first of all, I think a lot of people are trying to tie, Bitcoin and Ethereum and some of the price performance recently to the presidential election. And I actually think you have to broaden it out a little bit more and look at the broader general election. What happened with the Senate? What happened with the House? Regardless of party, you saw an overwhelming amount of politicians winning seats that came out as pro-crypto. And so really kind of across different levels of the federal government, you're seeing just much more support for, at least kind of anticipated support for these assets. Now, what does that mean? On one hand, it means you could get just kind of a more conducive regulatory regime towards digital assets. You could get more clarity on how people can use digital assets, more clarity on the types of institutions that might be able to use them. And I think that clarity and potential for regulatory support could really, be very positive for these assets in terms of broader adoption. We obviously have to wait and see, but, just the initial response has certainly been optimism around those election results.
Yeah, I think the hope from everybody is absolutely some more clarity moving forward. I think we'll get that. We'll see, and it may take a little bit of time, but I think that's the end goal around digital assets. Jay, always enjoy visiting. Congratulations on all the success with IBIT and ETHA. I think I've had probably more fun than anyone tracking this over the past year. So very excited to see what's in store for 2025. Thank you for joining me.
Well, thank you, Nate. And you've been such a great educator of your audience around digital assets. And I think, it's upon everyone. These are new assets. Bitcoin only being 15 years old. I think a lot of people and investors, advisors, institutions are really trying to understand these assets and understand if they make sense in their portfolio. And so I think just kind of the broader education around the industry has been been tremendous. We'll have to do this in 2 years. I'd love to come back at the 2-year anniversary and see how we're doing with IBIT and ETHA. But again, with some of the trends we're seeing around options, around advisor adoption, education, we're very excited about the year to come.
Well, thank you. That was Jay Jacobs, U.S. Head of Thematic and Active ETFs at BlackRock. Hope everyone enjoyed this episode of Crypto Prime. As always, please leave a review or give us a like wherever you're listening or watching. Apple, Spotify, YouTube, we're available pretty much everywhere, so give us a like, and I'll see you again next week.
Crypto Prime is hosted by Nate Geraci, president of OTR Media LLC. Nate is also president of the investment advisory firm The ETF Store. While OTR Media LLC and the ETF Store are related by common ownership, they are separate and distinct entities, and anything discussed on this program should not be construed as an official statement by the ETF Store. This program is for informational purposes only and does not constitute investment advice. Investing in crypto assets involves substantial risk, including the potential loss of principal. Any past performance figures discussed are not necessarily indicative of future results. Visit CryptoPrimePodcast.com for more information.